On to Admiral Markets. This is a live trading room where we're going to take a look at the Forex market price action, but specifically, of course, as you might be aware of, Fibonacci and wave trading this time around. So that's the focus of today. In any case, thanks for joining. My name is Chris, and once again, this is presented by Admiral Markets. First of all, before we take a look at the charts, though, this PowerPoint has to be explained. One of the disclaimers states the fact that this webinar is intended for a global audience and may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out more information on that. Also, please be aware of the fact that trading for exchange and global financial markets is considered high risk and it may not be suitable for all traders and investors. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. I continue to watch this webinar. You agree with the disclaimer mentioned here. And as always, I thank you for your attention. Also, you can request a copy of this by going to admiralmarketsglobal.com. Alrighty. So basically, you can use fibs and waves, of course, to use these checklists as well, the same thing as any other tools necessarily, in general, I should say. Before I continue with this topic, just in case, is there anyone new in this webinar that has not seen or witnessed or has visited a webinar with regard to fibs and waves before? If not, let me know through the chat, because that could be quite useful. I could be more cautious in maybe certain wordings or phrases or more explanations or etc. Or I know that you might have some questions, so that's always useful if you're new in here. Now, if you have any questions in general, of course, don't hesitate to write me a chat, clarify certain things. So let me move on to first of all, actually, let's take a look at the risk calendar here. It's quite a busy week. We have Aussie interest rate decision we have today. It's stayed at 2.5. We have CAD interest rate this week, pound interest rate, euro interest rate. We have apparently Yellen speaking. We have ADP, NFP, and unemployment claims for the U.S. Excuse me. So that's a big week. A lot of news, which could have a kind of nasty effect for technical analysis trader in the sense that price could be slow, choppy moving before the news events and then have a lot of spikes up and down after the news event and during it. So that's always a bit difficult for non-news event traders. Of course, news event traders are probably very, very excited about all the opportunities they have this week. So it's a bit of a full schedule. Otherwise, this week we have also the usual pound news event, by the way, construction PMI in 1 hour and 41 minutes. So let's see how that goes. Now, usually of, yeah, I noticed that you lost my voice. I think you should be able to hear me now. Again? I think okay, good. Yeah, the connection just like got lost there for a split second. Good. So what part of that wave 4? Well, it's probably part of a bigger wave 5 and 5, because the downtrend has lasted already for, I would say, half a year in the meantime, if not longer. The downtrend has already occurred many other waves, right? Within wave 3, this is basically just a gigantic, in my opinion, it looks like a gigantic wave 3, bearish wave 3, very, very, very extended. Within that wave 3, we're actually in the situation where we have a blue wave 5, a magenta wave 5, and a light blue 5. Let's focus on the blue and magenta 5s. Those are actually extensions within 3. You see here magenta 3. You don't even see blue 4, dark blue 4, because it's up higher. So we see magenta 3, we see magenta 4, and now we're finishing magenta 5. Within magenta 5, we have, again, 5 waves: a light blue 1, a light blue 2, a light blue 3, and a light blue 4. So that's why the upside here, although tradable, did have its limits most likely, due to the fact that price was banging against the resistance. Horizontal resistance, trendline resistance, fib resistance, because if you put a fib from here to here on wave 3, there was a 50 or 38.2 fib here, and you can see that that's typical for wave 4 to end and then fall again. Bingo. So basically, within wave 4, now probably finished, not 100% sure as yet, but looks like it's finished. So we could now make the last move down to finish blue 5, of magenta 5, of dark blue 5, of green 3. When we finish that, when we finish green 3, we can expect green 4 and then a green 5. So in my opinion, green 3 could end up where? At 120, 121, 122. I'll show why in just a second, but it has to do with the fact of the monthly support trend line. That's where I would expect green 4 to start. I would expect a big consolidation for Christmas, let's say the last 1.5 weeks of December, and then maybe even whole January. I think it's going to be a very slow January, slow start of the year, 2015. But then somewhere in February or March, I expect to break through 120, 122 for whatever reason, and I would expect the wave 5 to start pushing through the 120, 122 support, and I would expect, based on this wave analysis, to expect continuation down to 115, 113, 110, 105, parity even, depending on how much momentum and energy there is. That's green 3, green 4, green 5 in the long term. Now, before we get to green 3, we still have some downside the next few weeks, I think, until we get into Christmas consolidation. And I would expect, as I said, a consolidation to extend into January and the beginning of the next year. So often enough, I did some research on that. Often enough, trends like to start in February, March. So that would make sense in that regard. That would fit within that research. It's not an extensive one because there are not many Februaries. I mean, if you look back at 20 years, there are only 20 Februaries, so it's not like you can really do a lot of intensive one. I mean, if you go back 100 years perhaps, but I don't know, it doesn't really make much sense, I think. But anyhow, so within wave 5, basically, probably we're going to be in a wave 1 because it's impulse, and this was correction, wave 2, and now we're in a wave 1, and again in a wave 2. So we're probably going to have an acceleration here to the downside looking at this particular Eurodollar. And if you look at the 1-hour chart zoomed in, you can see that I expected the wave 2 to be completed here, the purple 2. So we had a blue 1, blue 2, purple 1, purple 2, and I would expect purple 3, purple 4, purple 5 to finish blue 3, then blue 4, blue 5 to finish the entire series. So we need an acceleration here for the wave 3. Let's take a look at the Eurodollar right now. Alrighty, sorry, it took a bit long. Okay, there it is. This is the 1 hour chart on our normal chart. You can see the big fall, of course, last week. The slow climb up. The climb up took longer than expected. There was a bit of an unexpected turn here. Well, I did say that there was a potential for a zigzag. It didn't happen. Although it looked pretty good for a break too, but it didn't happen. We got the zigzag. Then we had downside again, and it got a bit of a spike yesterday. Now looking for downside. So anyone trading waves or fibs was looking for reversal territory again somewhere yesterday for downside continuation. Right? Anyone trading fibs and waves that wanted to seek out a position trade throughout, let's say, or an intra-week trade was looking for shorts. Now, you might wonder that's all fine and dandy, but you're saying that now. Partly true, but also, in fact, I said it yesterday, just in case you're not aware of it. Let me show you. I said it yesterday in the, just in case you're not aware of it, I'll just make a small commercial for my own video, weekly overview of major currency pairs. It's always on Mondays. You can find it in the wave analysis section as well. So I make a recap, 8, 7, 10 minutes usually, sometimes 5, of what I'm looking for at the beginning of the week. So just in case you're not aware. So anyhow, I said that I was looking for a pullback on the pound dollar, dollar yen for dollar strength, and the Eurodollar I was also looking for dollar strength. So if you're looking at the 4 hour chart, this was a bit of a shooting star. It wasn't a perfect signal, and in fact I can imagine if some of you skipped that wick here because it's quite tiny. The engulfing twins after that, the bearish candle after that is probably a more confirmed superior signal than the one before. The one before is iffy. So that would have been a short signal for downside. Now that price is not all too far from now. I mean, price is only 50 pips away. One could easily put a pending order at 68 and could perhaps see a pullback to that level. Maybe not, because looking at the hourly chart, we could see maybe a 24.60 entry is better. Stop loss would have to be above the 125.07 top here to be, let's say, in a decent resistance spot. Anything lower is possible, but we're putting it in kind of in the middle of the zone, which means that we're going to have to exit soon because there could always be a retracement that takes out that stop loss. So the target is nothing less, in fact, in my opinion, than 122, 122.50. One could even aim for 123, depending on how fast one wants to exit. So it's quite decent. It's about 200 pips to 250 even, versus a risk of about 50 pips at the moment. If you wait for a few pips pullback, or 60 if one takes it now. So there's a decent R2R. It's about 4 to 1, 3 to 1, depending on which target is chosen. They'll say 3.5 to 1 to take an average. 3.5 to reward to risk to 1, which means that if this trade works out in more than 35% of the cases, no. Let me think. 3.5. 1 second. Yeah, if it works out 3 out of 10 times, we're profitable. Not much, but a bit. Now, of course, if it works out more, if it works out 35% of the times, or 40%, or 50%, there's money to be made, because even if it goes wrong, you lose 1 unit of risk. Now, we, of course, always risk something that doesn't, bankrupt our account right away. So something like 1%, for instance. Why is my not? Sorry, my drawing tool is not working again. Good. So minus 1% is lost. But if the trade is profitable, this is 1. So, you could even have something like that, but you're still profitable in fact. So that's my thoughts. Now, that's based on wave and fibs. How much retracement could we expect here? Kaylin is asking, chance for 25.10. There is a chance that price, actually there is always a chance indeed that price could go up to the 78 or 886 fib. There is that chance indeed. There is that chance. So if one wants to wait for a bit more confirmation of a breakout, waiting for the support line to break, instead would be the alternative. Or waiting for this, indeed. By putting a stop loss here, it is still a bit on the tighter side when looking at this chart. What else can I say? Because this could still be something like this, for instance, an upside. This could be a triangle, and then we get an ABC correction up to the 886 fib, and then a downtrend. That always makes this particular analysis a bit difficult, right? Because there's always kind of the alternative. The safest stop loss is really above the magenta line, really above last month's high at 126. Because that's the number one invalidation level. Because when price goes through that, this fib is not valid. If price stays below 126, this fib is still valid. And it could turn here, it could turn here, it could turn here, it could turn here, it could turn here. At the moment, it has turned at the 61.8. But is that the turning spot, or could the fib go higher? Now we know statistically that the 61.8 is already a often used turning spot. So there is a chance, but not a very high chance, that price will get to the 78 or 880.6 fib. Because the 61 is already pretty deep as a retracement. Now, I'm sorry if some of you are coming in later due to the timing, because I think some of you, Nana told me that the webinar announcement was actually showing 8 a.m. UK time. Is that true? I mean, I'm sure it's true, but I mean, did you have the same as well for yourself? Because usually always these webinars start at 7:45, not at 8. But anyhow, if you're hearing later, sorry about that. And we already started a couple of minutes ago. But basically, to summarize it, basically Eurodollar downtrend, Eurodollar looking for one more fall, Eurodollar down. I would expect the target to be 120 to 122 zone. 122.50. Expecting price to have a breakout here or move down from this fib retracement levels, and one could try to stake out an earlier position within this triangle, perhaps here, although it's in the middle of the triangle from this perspective, or more closer to 125. You see, when you put trend lines on, it looks a bit different, because now we see, well, we're actually right in the middle. Looks different right away. If you look at it from fib or wave perspectives, then this engulfing twin was a good entry here. And this was a good entry as well. And this was a good entry here as well. MJ says 9 a.m. and Claudius says 7:45. I guess, I don't know, probably somewhere some communication was at 9, I guess, somehow. So sorry about that. So this is, I guess, it regarding the Eurodollar. Let me just check out this stuff again. On the hourly chart, we can put a fib like this. And you see a 78.6 fib yesterday. That was a good turning spot. And yeah, nothing to add really. Alrighty, let's move on. Pound dollar. Pound dollar, similar story. In fact, we have a wave 4 here ending, going down for wave 5. Within that wave 5, we have a 1, 2, 3, 4, 5. Now, this wave count could easily be a bit different, and it could be just as valid. I don't think it's really that important. As I've told you before, wave counts for me is, although I try to do it as good as I think it can be, they're for my own trading just more of a general guidance, direction, idea what price could do, why it does certain movements, and not really the main or ultimate or only tool, decision-making tool for taking trades. So it's for me just like a jigsaw puzzle, as I've already told you, like, okay, this is impulse, this is impulse, this is correction, this is impulse, this is correction, this is impulse. So if I add these impulse, impulse, correction, impulse, correction, impulse, what would be the most likely next move? Is it impulse down? Is it impulse up? Is it correction down? Is it correction up? And then I make an estimate, a guesstimate, which one seems most likely. But that's not the only thing that, of course, goes into my trading. It just sometimes gives that extra support or extra critical factor not to take a trade, or extra confluence, whatever. It's more like a tool like that for myself. And at this point, I have this 1, 2, 3, 4. As you can see here, slow sideways move for wave 4. A 5 wave here for the first wave, then a correction, then a wave 3. You see, look, impulse, fast impulse, correction again. And what I think we're seeing here now is a wave 1, 2, 3, 4, 5, 4, 5. Now that could be, this particular wave 1 here could be the end of that downside. It could be, but I don't think it is. I think it's more of an extension. Most likely we'll see an extension with, in my experience, we see that often 1, 2, and then we'll see 5 waves for completing red 5. Here you can see the first wave, a deep pullback, and I'm expecting now downside. Now the news event, of course, could change things. If price does break through the resistance lines, then the ultimate level is this 100 level here, the top, the origin of wave 1. If price breaks through that level, then it is not a wave 1 anymore. It has to be something else. It cannot be a wave 1, 2, because the wave 2 cannot go above the origin of wave 1. That is a rule that you can always use. So when using stop losses in wave terminology, you want to find a spot, preferably if possible, if it doesn't entail a mega risk, that in terms of pip size, that you put a stop loss that would kind of like invalidate the whole setup. So that level would be here if one is trading a bearish setup, looking for shorts. From a wave perspective, it's here. Price pushing through that does not means that there's not going to be, or that anyhow, the whole idea of taking a wave 1, 2 trade is out of the window. So let's take a look at the pound dollar now. And that was earlier this morning, as you can see. This particular screenshot doesn't even show current price. It shows price here hanging around 157.30, and I expected the wave 2 to be finished there. So here we go. Now in the meantime we're a bit lower, as you can see. Now in yesterday's weekly overview, which Kaylin, for instance, wasn't aware of, so I'll just tell you one more time. You can find a weekly overview on Mondays. Normally it's a bit earlier. Yesterday was a bit later than usual. Sorry for that. Usually it's in the morning. You will see a heads up on the pound, Eurodollar, dollar yen, and USD. And I was expecting price to retrace back to the 50 and 61.8 fibs. that zone got broken. It actually went a bit higher, but that's okay. That's the same value. Now, there was not a good candlestick pattern, in my opinion, at these levels, but this particular bearish candle could have been a signal, of course, that the uptrend, the upside here, the up momentum is over. From an hourly perspective, there was not a great signal either. Maybe this engulfing twins here, or even this candle here, of course, as well. Not bad on the hourly. I was looking for the 4-hour myself, though, not for the hourly, to avoid these signals, where the hourly candle shows a pin bar, but price still pushes through. I thought that seemed likely to me, so I was monitoring it on the 4-hour chart. But this signal and this signal were okay. Now, if you used both these signals, the first one, if you use a tight stop loss, then it would have been just above the high. It would have been stopped out, unfortunately. If you used a bit wider one, above the 78 or the top, then it would have been a survivable pullback. In this regard, it's a short here as well, in my opinion, with either a wide stop loss here or a tight stop loss here, and the target of 155, 155.20, and an extension 155.40. Let me take a look at Camarilla levels with you. Let's see, we have an L3 here lower. It's quite a wide L3, H3. We also have a daily and weekly pivot point. So probably the best is not to take it now, but wait for the daily and weekly pivot point to break. Push through that level. And a push through L3. That could be an interesting intraday setup on the pound dollar. So that's coming up, I think, when looking at price action. Alrighty, so let me head back. Looks like shorts on the pound dollar and Eurodollar. Now, dollar yen is steaming up. Yesterday in the recap, I said look for longs at the bottom of that channel, which indeed has been a bouncing spot so far. As you can see here, price bounced off that bottom indeed, and looking for follow through up to max 120, I would say, which is a big resistance spot. To complete wave 555 of 3. Of course, this is a mega uptrend, so you're going to have, you had a lot of extensions in that upside. So you can see here we had, let me show you here on the 4-hour again, you can see a wave 1, 2, 1, 2, 1, 2, 1, 2, and then we got boom, the 3, and then we just kept making 3, 4, 5s, 3, 4, 5s, 3, 4, 5s. Typical movement. So back to the dollar yen on this particular chart, and you can see that here we had a great pin bar at the bottom of the channel, the trend channel, and along at the trend channel or after the confirmation would have yielded a good number of pips at this moment. Or yeah. Now at this moment, I don't see any trade because price is too close to resistance. So the trade was earlier at the bottom of the channel. Not now. This one is gone. It's too late. From this perspective, at least. From an intraday perspective, it could be a bit different. H3 at this moment. Well, it could be an intraday trade. I wouldn't say a intra-week or position trade wouldn't be the best of value, but if price does stop here, make a bit of pullback, maybe there could be a breakout after pullback. But we have to be on our toes. Now the Aussie looks a lot better to me. I'll show you why. The Aussie, let's take a look at the AUD USD. The Aussie is either going to have a breakout or a bounce trade. I'm not really all too aware of an exact wave count, first of all. The wave counts I only do extensively on Eurodollar, pound dollar, and dollar yen. If you would like me to do any wave counts on higher time frames or different currency pairs, just let me know. Otherwise, I'll just keep it at the intra-week 1 hour, 4 hour charts that I just showed you. All right? But if you have any preference for long-term and any specific currency pair, just let me know. But otherwise, I just will continue with fibs for the moment and other tools, okay? The audios, I think, could be very interesting because we had an upside momentum yesterday. When you look at the upside momentum here, we see bullish candle, bullish candle, bullish candle, bullish candle, first bearish candle, then another bearish candle, but then we see again a bullish candle. So it looks like it struggled here in this zone. We had a bit of a reaction to it, but then we got again a bullish candle. So for the moment, this engulfing twin could lead to some more upside, and it could be something like this when you look at candlestick patterns. Of course, it could still be a failure and move down like that as well. So I'm going to keep an eye on how price reacts when it approaches this bottom. Key level is the low of the engulfing twin. Key level 2 is putting fib from here to here and looking at the minus 272 target and the minus 618, because if it does make that, I'll be very interested in shorting it preferably at this resistance spot, the minus 618, maybe even the minus 272 target. The other scenario would be that price doesn't get up that high and breaks lower like this. So it's an interesting situation at this point on the Aussie, and looking at it from a bigger time frame, once again, this is an interesting spot. Why? Because it's breaking the monthly bottom here. It had struggled long, actually here, 1, 2, 3, 4, 5 candles. Sixth candle tried to break through it, didn't manage. Then again, another 2 candles going sideways. But last month, November, finally, an entire candle below the monthly support level plus a close near the low. So that's why definitely bearishness looks good. And I would be more inclined to be interested in a short from higher, from the minus 618 at 86. So I'm looking to short it at 86. Let's see, at 86 we have a daily R2, a monthly pivot point. We have an H5 target as well. Price didn't manage to push through H3, it actually reversed from H3. So we're stuck in between H3 and L3. So from an intraday perspective, we would need a break above or below this level. If it does break above, once again, more interested in actually the reversal at higher level than the breakout to the upside. The breakout to the downside could be a bit more interesting because we're in a downtrend, but then price would still have to break through L3, not only the bottom of the engulfing twin. Kalian mentions 8604. Yeah, cool. That's the minus 618 target as well, yeah? Great. So let's see, hopefully it gets there. We never know for sure, of course, that the retracement goes that deep. But if it does go that deep, then there is a good chance of a turnaround. Also, one more thing I forgot to add, also because of the fact there's some other confluence at that level, by the way. Just quickly, let me show you. Besides these pivot points then, there is a trend line this trend line, I think it was, yeah. And also, if one puts a fib from here to here, it's a 61.8 fib. Like this. So it's a retracement and a target at the same time. Kiwi is a bit different. Kiwi is actually a bit different because of the fact that it's kind of in this channel and it could be trying to break out to the upside. At the moment, it's bouncing off the top of this channel. So, but the Kiwi doesn't look as bearish as you can see. I mean, on the daily chart, maybe yes, but on the 4-hour chart, you can see a lot of sideways move. So, not as fan of the Kiwi downside as I am compared to the Aussie. In fact, if this does break to the upside, it could be even worth trading to the upside. Taking a 4-hour breakout candle here with the target at the -272. But certainly not as bearish in any case. If we're talking about the Aussie and Kiwi, we might as well take a look at gold. The downside trade worked out nice from the -618 target. I think I mentioned, I'm not sure, but I did say also there's a referendum. We don't know how referendums have result. Swiss eventually voted no, and indeed we got the turnaround at 618. But then we still had a bounce at the 78.6 fib, interesting enough. So very deep pullback, still a very strong bounce as well. It's funky movement. That could have to do maybe with the news that was on the yen yesterday. Let's take a look at other pairs. Pound dollar is very close to resistance again. Very spiky environment. Yeah, it's a bit of a funny environment here with price going up and down like this. Not a big fan at the moment. When you look at the current sideways move, it would almost seem that it's more set up for a break to the upside here like that. But resistance is pretty close, so it's not an easy one to catch at this point. When we put a fib on a new swing high, swing low, the most current swing high, swing low, you can see price bounce off the 38.2 fib. Yeah, no, I don't like this setup. It could be a breakout trade, but resistance that close by is difficult. Euro odd, also a bit funky with a upside. I would be actually more inclined to look for reversal down in this pair, if anything. If you put the fib on the very first swing high, swing low, you can see we just missed the -618 target, but I mean it was so close that one can consider it already hit with a pin bar here. That was the daily chart. 4-hour chart, 1-hour chart. 1-hour chart, you can see that the price is more making a triangle. So if the triangle were to break to the downside, it could be a good reversal trade. Something like that. Let's take a look at where the Camarilla levels are. We can also start fibbing this. You know, when we have a fib target close by here, a big fib, one could even start fibbing this downside. And you see that the minus 618 target got hit. So we could put the target now from, let's see, from here to here. And any of these fibs, we're actually going back to resistance. The 618, 786, the 50 fib, all of these could be actually entries with a stop loss above the 100% level and a target at the minus 618. It's a bit riskier because it's a reversal fib. Why is it a reversal? Because yes, the uptrend is up. So it's definitely a reversal setup. Price would actually have to break through these support levels before a trend change could be identified in the very first place. Only thing we can now see is potential for a bigger reversal off of that target. So one could do that. One could really use a particular level on a higher time frame and zoom in for more microscopic trading. And there is 4-hour divergence between these tops. And 1 hour divergence. So I think it's not a bad plan. One could even look on the 30-minute chart to see if there's, for instance, some kind of wick here at the 61.8 or the 78.6. Any kind of rejection signal at these fibs if one wants to get a bit more confirmation price will be turning here. The other option, of course, is just a market entry right here or wait a bit higher. But this is already the 50 fib, which is not that bad, in fact. So that's my 2 cents on the euro odd. That looks pretty interesting for a reversal pound odd, just too close to resistance. Let's see, EuroCAD is, let me take a look, looking like a bouncing spot to the upside indeed, I agree. Let's see, EuroCAD 4-hour chart, or maybe actually weekly chart is the best. Let me show you why. Because looking at the weekly chart, what we see last week was a very bullish candle. It closed near the high, almost engulfing the week before. It's certainly a bullish candlestick pattern. It's showing strength, pretty sizable candle. So what could happen this week is just a retracement of last week's candle for upside. So if we mark the halfway mark, put a line at the halfway mark here, probably roughly like this, that could be easily a bouncing spot. And we're retracing back. We could put a fib actually to see where that halfway mark is. Yep, roughly there. So price is heading back to that level. That level is 140.80 roughly. That's the 50 mark. So I think that is a good bouncing spot indeed. 150.80 had these tops too. 150.80 is could be still above this trend line here, where you can look for all kind of complements, I guess. But I think that does make sense from a candlestick, weekly candlestick perspective. The stop could be at 40.80 indeed. It would be using this 61.8 fib. It would be using this bottom as a support level. All right, so it's definitely possible. Now the wider one would be below the bottom, of course, below 138. But that's a very massive stop loss. So using a tighter one at 61, below 61.8 is it does make sense. It puts it in the middle of the playing field, but in this case, there's reason to do so. It's maybe a bit riskier, but it also, the reward is higher, so that would compensate some of the risk as well. And it makes sense to look to place it below a pretty decent support level where we have a flat move, a top, a 61.8 as well, and trend line. The target 43 makes sense. Could even go higher. Could go to minus 272, 43.70. Let's see. 40.80 has a daily S1. There's not a lot of confluence there, and a L3. Well, there's a bit of confluence, but not a ton of pivot points, but something, but not really a lot. So, as always, a candlestick pattern at 40.80 could help as well to enter at the right time, but also even put a tighter stop loss below the candle low. Even if a candle low is used, though, using 10, 12, 15 pips below the low does give more, just a tad more space to the trade. Alrighty, so that's the EuroCAD. I like that. Good choice. My entry level 40.80 would be the level I'm looking for, but I think that waiting for a candlestick pattern would not hurt here. We have a lot of momentum on the hourly to the downside. If we put a fib on that swing high, swing low here, the first target minus 272 target is 40.76. Another confluence by the way, but or minus 618. So stop loss has to be below this 40.30 indeed. Yeah, the interest rate, definitely. You have to be careful of that. I don't think the interest rate is today, is it? But it's maybe tomorrow, right? Yeah, the whole week we're kind of bothered with this, with these interest rates and big news events, which is always annoying. I don't trade the particular pair when it has interest rate that day. So tomorrow I wouldn't trade the CAD anymore. Now, if it's a trade is still open, it will depend how this. It just really depends. How much am I up in profit? How close am I to the TP? Where is the stop loss? How close is it to the news event? Yeah, I don't have a fixed rule for that, but I don't trade. I don't open a position on the day of interest rate. So I don't trade the euro and pound on Thursday, for instance. Alrighty, so 4-hour divergence. Let's take a look. There is actually, yeah, but there's a different type of divergence. There's double top here. Double top, but we have a higher oscillator. So this is a case where there's more momentum than price action. What we of course want to see, I mean for sustainable, is that this is higher too, where we have classical higher high and higher high. Now, or the other way around, is here would be a higher high, and here we have a lower high. That would be divergence. In this case, it's actually hidden divergence, which is bearish indeed. Hidden bearish divergence. Yeah, it could happen. That one, of course, trades that already happened, and it doesn't really make sense to discuss it. But A turnaround at the resistance certainly was not a bad idea if one would have looked at it. In the meantime, though, of course, that's way far from now, so it doesn't really make sense. But it still, I think, despite that, could be a bouncing spot. But maybe the target, one has to be a bit more cautious with a set and forget strategy. Maybe a trail stop loss wouldn't hurt, just in case this does turn down once more time. Let's take a look at the CAD yen now. Yeah, the CAD yen just as bullish as all the other yens, in fact, like the dollar yen. Yesterday engulfing twins after a very serious upside. Break of this resistance line. Let's see, what's the fib target in CAD yen? 106.44? Yeah, it depends, I guess, which time frame is chosen as well. Let's take a look at this daily. So using the daily, it says 106. The 4-hour fib. Let's see. 4-hour fib here, yeah, that's a bit high, but it has a minus 272 target of 106.20. And then last but not least, the hourly, let's take a look. That is a very short fib, so these targets are going to be hit pretty soon. Yeah, 106, I think, wouldn't be too bad. Looking at this particular confluence, one can keep an eye on the 1-hour chart, see how much energy there's still left. And the 15, maybe to keep an eye on a closer turning spot, but I'm not sure which time frame you took. You could also take a look even at the weekly, of course. That big target, actually, of the weekly chart is 106.80. So yeah, 106, 107 seems to be a big area with a lot of targets from different time frames. You're talking about the 1-hour chart, and I see minus 1272 at 106. There's a minus 618 at 105.26. That could be already a temporary halting spot, maybe something like that. So that's the CAD yen. Let's take a look at some other pairs like the euro yen, pound yen as well. Pound yen, I would like a pullback. If not now, no. too far away from everything. If it pulls back to, let's say, I'm not sure if I'm interested in this at this point. I'll keep an eye on, you can keep an eye on the Kimberella, of course, logically, to see if there's any pullback to the L3 or to the moving averages, and it could still be a bouncing spot. Let's take a look at the Euro yen. That's still stuck in a range. Dollar CAD has a lot of pivot points above it, so not interested either way on this one. Pound New Zealand. Pound New Zealand is actually has the potential for breakout again, like we had a breakout of this magenta. It could be breaking out of this trend line. Right here, and the target would be the minus 618 target at 202.80, which in itself could also be again a turnaround level for downside. Put this channel here. You can see that the downtrend lasted very nicely. Big momentum to the downside. In fact, as we know, it was a big trade. We talked about that. We talked about the bouncing spot potential here. In the meantime, we broke out of magenta and are making this channel. So this is a classical uptrend channel. We got 3 hits, 1, 2, 3, 4 hits perhaps. We have a decent angle. We broke out of the momentum to the downside. We broke out of the trend line as well. So what we're now waiting for is uptrend continuation. That could have been either at the bottom of the channel, or one could have even now wait for this trend line to break for the breakout trade right there to the minus 618 target. Right, classical trend channel, trend change, and breakouts on a lower time frame for follow through on the pound New Zealand upside. So could monitor this 4-hour chart or even the hourly chart to keep an eye on a good breakout candle. If there's a good breakout candle, that's great. And then looking at the setup, I think still waiting for the pullback back to the trend line makes sense. I'm not a big fan of the Euro New Zealand at the moment. It looks very choppy to me. And I don't see anything interesting to trade at this point. I can connect some lines like this and like that. Maybe there could be some setup if those trend lines are broken. I don't know. At the moment, maybe the only thing that could be valuable is a bounce off of this trend line. No, it doesn't inspire me, to be honest, so let's move on. Pound Swissy. Looking for pairs that I didn't discuss as yes, pound dollar Swissy. No, not a big fan. Also not really something that this one no, but yeah, it kind of looks like an ascending wedge if anything. There could be some Aussie weakness. There's a big downtrend. We broke this trend line. This could be a pullback for more downside. So in this regard, Aussie CAD could be an interesting short potential. All right, pound CAD. Engulfing bearish twins there, but also have a double bottom. Let's see. engulfing twins on the weekly chart though. Let's see how the news event handles itself. With the engulfing twins, I wouldn't be surprised if we retrace part of the engulfing twins and still bounce up. So looking for support about halfway, just like the other CAD pair, could still make sense, I think. Kiwi, we can take a look at that. So let's make a summary as well. So because now we look kind of like all pairs almost, I guess. So let's take a look at the Kiwi, and I'll make a summary. One second. Where's the Kiwi? No, it's more forward. Here it is. Kiwi is weekly downtrend, but it's definitely struggling at this weekly bottom. And you can see that already 2, 4, 6, some 9 weeks have basically passed by, and prices not able to break through this support line. And let's see, to be precise, yeah, 8 weeks apparently. This is the 9th week, so it's struggling with pushing through this support level. And when looking at the daily chart, it is looking sideways, choppy, not trendy. Yes, price was trending before that here, but price broke through the resistance line already and is now kind of sailing above it, using it as support. So what could happen is that this was an impulse, this was a break, this was a kind of consolidation, and there's a chance of a zigzag back up. I was thinking about a head and shoulders too, indeed. I didn't say it because it kind of, it's a valid point indeed. Why not? It's not a perfect symmetrical. That's why I did not a really symmetrical one. So, but yeah, there is reason to look at it. Why not? Right, there is something to say for it. So in that regard, that could happen. And of course, putting a fib from here to here, the target would be the minus 618. We did stop at the 61.8 fib here. We see yesterday was a bullish candle. So there is a chance that price could do that. So one of the ways could be to take a look of this resistance line. Or as price gets closer to this bottom, could be a bouncing spot. If price does break through this support line, I'd get a bit cautious of the Kiwi upside, because then this could be seen as a, it could be seen as a triangle as well. So this could be a breakout, bearish breakout. So I would be careful with looking for longs after the breakout. That wouldn't do that anymore, I think. Could be dangerous. In fact, one could even look for a bearish breakout. Although when looking at the daily chart, the bearish breakout is also a bit tricky. It's not an easy currency at the moment because of the flatness. But I guess candlestick patterns are the biggest relief, either waiting for these signals here at the top of resistance, or even waiting for these signals here at the bottom of support. Probably the best. Eventually, of course, this cannot last forever. Price will break through one of the two, and we will get either a zigzag breakout or a trend breakout. The Kiwi is not a bad one. It is worth putting on the watch list. I do like the Aussie downside a bit more, though, from the 61.8. So that's the one thing that is in my mind, the Aussie downside from higher. Other than that, looking for a pound dollar break lower, Eurodollar to the downside. The Eurodollar is already moving a lot to the downside. When we talked about those setups, Eurodollar downside and pound dollar at the beginning, Eurodollar looked good. Pound dollar, I said, probably better for the daily, weekly to break, and the L3. That hasn't happened yet. So those look good. The Aussie looks good. Those are my favorite, I guess. Kiwi after that. And what else? The euro odd, downside. Just looking for from these fibs. And otherwise, I don't think there was, I think these were the most interesting for me, right? Because otherwise, I don't remember seeing something that caught the attention. The pound New Zealand maybe, right? The break to the upside. And the euro CAD, in fact, right? The bounce halfway was also on something to watch for. And anything else? No, not that I recall. I think because looking at the other pairs, I don't remember anything that was of interest. So I think that was the most interesting ones. Alrighty, so with that said, let me head over to this webinar summary here. Nenad had his recap yesterday on Mondays evenings. As you probably know, tomorrow we'll be back with the strategy webinar. Yeah, sorry, anyone who who came at the top of the hour at 9 or 8 a.m. 9 a.m. Central European Time or 8 a.m. UK time. Indeed, we started at the usual 7:45. There was some of you saw either the email or I don't know exactly what kind of communication it was where 9 or 8 a.m. was mentioned, but that indeed was incorrect. Tomorrow, sorry for that, there was a mistake there. So tomorrow we'll be back with Forex strategy 7:45. Even if there's an email that says 8 or 9, it is a mistake. It's 7:45. The login did not activate at 7:45. Okay, I didn't know that. There were a few of you in here, less than normal, certainly, and a lot did come later. So, the link said too early. Yeah, that's annoying. I didn't know that. What kind of communication was it that said, was it the link that for login that said it? Was it emailed to you, or did you try to log into the site? Because on the website it does say 7:45, so I'm just wondering which vehicle it was so I can correct it. Okay, I'll take a look at your email then. I didn't check my email yet this morning. So I'll check your email. Let's see. Ilya, you missed the 29 November webinar on triangle breakout. If there's any video available. I am not sure. It's a very good question. Unfortunately, at this moment, the archive hasn't been updated since the July. But the videos are available on YouTube. So one could take a look at YouTube. Let's take a look if we can find it. You have to find the Admiral Markets page. 1 second. Here we go. It should be there. If it's not there now, then it should be uploaded soon. Here's the weekly overview. Maybe this one is not indeed uploaded because it's a premium webinar. It's possible. Yeah, the best would be to, do you have the email of Nenad? Because he has the indicator and he could send that to you. Okay, cool. That's the best thing you need to do. So tomorrow we have strategy, and Nenad is going to take a look at why you. This is a CD archive. 1 second. Nenad is going to take a look at all you need to know about stop hunts in the evening. And then Thursday, by the way, we're going to take a look at the future of technical analysis. I think it could be interesting. We're going to take a look at trends, how technical analysis could look like maybe in a couple years from now. So join us on Thursday evening if you have time. So that wraps up for our session today. Thanks so much for joining my analysis and taking a look at what I find interesting for today. And wish you a good day, happy hunting, and see y'all very soon. Cheers.